Now let's discuss the core principles and key components of accrual concept of accounting. So what are the core principles? So there are two core principles which comes under accrual concept of accounting. One is revenue recognition and the other one is accrual, which is called matching concept. So under the revenue recognition, what does it states? It states the revenue is recognized when the sales have been made, when the goods or services have been sold by the organization to the customers, the revenue is recognized, irrespective of when the cash is received. So whether the customers have paid for it or not to the organization, but the revenue will be recognized in the books of accounts as and when the sale has been made in the accounting period. Under the matching principle, similarly, the expenses incurred to earn the revenues will be recorded in the books of accounts irrespective of the cash has been exchanged against them or not. Why? Because to match the revenue with the expenses so that correct for that particular financial year, so that correct financial health of the organization can be known and presented to the stakeholders of the organization. So these were the core principles of accounting. Now let's understand the key components. So what are the key components? Key components are accrued income. What is accrued income? Accrued income is the income which has been earned but not yet billed. The billing has not yet been done, but you have already done the services. You have already, given the services to the customer. So under this concept, you will be recognizing the accrued income. Similarly, the prepaid expenses. So what are prepaid expenses? The expenses for which the payment has already been made, but the services are yet to be received in future. So these will be recognized as a current assets in the company's balance sheet, and as and when the services would be received, the corresponding expenses, the proportionate amount of expenses would be charged to P&L account. Now likewise, accrued expenses. What are accrued expenses? The expenses which has been incurred. Now you have already used these services, let's say utility services, but the bill has not yet come. So when you are recording your transactions, you will accrue for those expenses because you have already taken these services. However, since bill has not come, you have not paid it, you will accrue that expense in the books of accounting, and it will be shown as a liability, current liability in the balance sheet, and the expenses would be charged to the P&L account. The fourth is deferred revenue. So what is deferred revenue? Deferred revenue is cash received in advance, but services are going to be given in the future. So you have already received the cash from the customers. However, the services will be given basis the milestone, or this is mostly in the project based accounting where the billing is done on a milestone basis, but sometimes you receive the amount in advance. So this was the core principles and key components of accounting. I hope you understood this concept and its relevance. Do let me know what other topic you want me to cover in my next sessions. Thank you so much for tuning in. Do like and subscribe this video. Thank you.